Welcome back to another episode of The Takeoff. I've got a very, very special guest in the building.
Stop it.
Please introduce yourself. Please introduce yourself. I'm a massive fan of his, by the way. So please do introduce yourself, Emmanuel.
My brother, thank you for having me on your channel. It's a privilege to come support. You know, I love what you're doing. Love the consistency of your content. My name's Emmanuel. I am a YouTuber / investor. I invest in stocks predominantly is what I portray, but I also have a property portfolio. I also invest in bonds. I have businesses outside of my YouTube platform. So I do quite a few things, but most people know me as Emmanuel Finance, the stock investor, and that's predominantly what I enjoy. You know, I've got a vast portfolio, but my passion does really lay in breaking down companies, you know, trying to understand their value, and then making an investing decision, and then being right over the long term and making money from it. So stock investing is what I talk about. I predominantly focus on small to mid-cap stocks. So typically market caps of 1 billion to about 50 billion is usually my main focus. And that's because I'm trying to look for exponential growth. All right. So that's my predominant focus. I speak a lot about Ttcf, speak a lot about Palantir, Celsius Holdings.
Talk about those today.
Yeah, those are my babies. All right. Those are my babies. Okay. That's really what I talk about. You know, I keep it real on my channel. I try not to take the approach where I'm perfect. I feel like, you know, being able to understand that I'm not perfect, make mistakes, and then also share my mistakes improves me as an investor long term. So, you know, you can go on my channel, you'll see my wins, you'll see my losses, and hey, it's part of the game, baby. It's part of the game. But it is. That's a little bit about me, and I appreciate you having me on your channel, brother. Thank you.
Awesome. No worries. You know, like I said, I'm a massive fan of you. You listed out a lot of things out there, which is great. So stock investing,
straight off the bat, let's go.
Business, you're doing like, you know, YouTube as well. How have you found your YouTube journey so far?
You know what? I found it very exciting. I found it as a bit of an experiment as well. And I think YouTube, I kind of view it as a business, all right? Because of course, I'm at a stage now where it's generating revenue. But like any business, you know, when you start out, you know, it's tough, especially at the beginning stages. You might not see any fruits of your labor for a very long time. You know, because, you know, just like in business, your success is not owed to you. So the same thing with YouTube, you know, at the beginning stages, it's not owed to me, but I understand because I've already started a business prior that's been successful. I have a successful wedding photography business. I have a successful property business. I understand the process of, you know, building. All right. So with my YouTube journey, I went into it knowing that I'm going to have to build. And, you know, we're going to see nothing for the next 6 months to a year to even 2 years. But it's all about, you know, staying consistent and also improving or trying to find ways to improve per video and with the content and the value. That's the main thing, you know, make sure I'm giving as much value as possible. And, you know, eventually people will come. Do you get what I'm saying? So it's almost a law, you know, that people are attracted to value. And that's how my YouTube journey has been. And, you know, at the beginning stages, it was tough, just like anything. But once you cross that barrier, it almost becomes a compounding effect. So all of the work you put in initially is now working more. And I've seen the growth in my subscribers, you know, that 0 to 1,000 subscribers took like 6 months. You know,
crazy.
6 months. And then the next 6 months was like, you know, from that 1,000 to 10,000, and now within the last 4 months, it's like from 10,000 to 16,000. We're on the way to 20,000. So you know, but that graph at the beginning is usually where people fail, and there's no difference in business. You know, like the most businesses fail within the first 2 years. So I would say probably YouTube's the exact same stats.
Yeah, the thing with YouTube is that I think a lot of people start it with a lot of energy, enthusiasm. I'm gonna be the next, I don't know, big YouTube star, PewDiePie. I'm going to be the next PewDiePie or something, or Graham Stephan or something like that.
And they just, Kevin.
Exactly. They're just going with a lot of energy, not noticing that those guys have been doing it for years, 5 years, maybe the first 2-3 years. They didn't get anywhere. And then it's just compounded, like you said, for the last few years. So a lot of people do go in it with a lot of energy, and they just don't understand that sometimes you need to have that consistency.
It's the same principles in business, brother. There's a book called like the 10-year overnight success, right?
Yeah.
So, people just see the success overnight, but they don't realize that, it's taking this guy 10 years of labor, grind, blood, sweat, and tears to get to where he is. So people see YouTube channels are like, oh my goodness, this guy's blown up, but you don't understand that there, in order to get to where he is, there's a foundation that's been laid, and that foundation takes time. Yeah,
exactly. People put in that effort. Somebody's done all of that work. Like you said, you put in all of this effort, and you were prepared for yourself to wait 1 and 2 years for nothing to come to eventually, get into that.
Facts.
Out of your, property, your wedding business, why stocks? Why did you get into stocks?
I mean, stocks really, if you look at it, like everything else that I'm doing, business, property, everything else in those genre is active income. People say property is passive income, but people that are in property really know that it's not passive. That's a lie. You know what I'm saying? You're gonna get tenants call you like in the middle of the night saying the light's gone, the light bulb's gone. Like that is not a joke. Like we do get that often. And it's like, my goodness, a lot of my properties are in Manchester. I live in Northampton, Milton Keynes area. It's a 3-hour drive. And it's like, tenants expect you to do crazy things, right? So, and it can get frustrating. I also have an Airbnb business. So my property's on Airbnb. So we got guests churning in and out. And, guests as well can be very demanding with their expectations. And it's just work, all right? Yeah. Wedding photography as well. I do the photography. I have people that work for me as well. And that's, again, active income. The only true passive income that I know of that I can think of is stocks, all right? So you invest in a company like Apple, and every 3 months they send you a check, regardless of what I do in that 3 months, the dividend payments comes to me, unless the company cuts dividends or whatnot. So I have no involvement with the running of Apple, or Microsoft or whatever company pays dividends. And that is the purest form of passive income that I can think about. Yeah. And that's why I love stocks, because, if you can build up your income to a point where it covers your living expense, then you've won. Do you get what I'm saying? Then you've won the race, the rat race. And that's essentially my goal. To be honest, to build my dividend portfolio to a point where I take care of my living expense and officially financially free, and that, I think that's the objective, that's the goal, that's the motivation. That's why I prefer stocks above all my other ventures.
When you said it, that is the true passive income. I actually started to think about it. You're absolutely right, because you're doing all the upfront work, researching the stocks. Obviously, you have to maybe continuously do it maybe every quarter for earnings and stuff like that, or any news. But at the end of the day, it's working for you. It's actually working for you. The stock isn't calling you to say, oh, come and fix my boiler.
Exactly.
Or come and sort out something at my wedding.
Exactly.
It's not doing that. It's not doing that for you. So you're absolutely right. And I love that you mentioned financial freedom, because I feel like that's often overlooked when people are talking about building wealth. What is your financial freedom goal?
If I look at all things considered right now, I'm in a position now where, because I live very minimal. All right. A lot of people think they need to earn more money to be financially free. And the reality is, it's the complete opposite. You need to reduce your liabilities to a point where then your income coming in can replace your living expense. So I realized that a couple of years ago, and I made it a mission to reduce my expenses as much as I could. So I'm at a stage now where my living expense is very, very minimal, and I can consider myself financially free. And I'll be honest, like, I was financially free to a point where I didn't really need to do anything before COVID hit. I had achieved that when I was, because I'm 29 now. I achieved that when I was 28. Wow. Where my income exceeded my living expense, and I was financially free, or I stopped working for like 3 months. Now I got bored. Challenges came with COVID as well in regards to my business. So the wedding photography side was stopped. A lot of companies cut their dividends. People were not allowed to travel, so my Airbnb business as well was tight. So all of a sudden, I was in a position where all of my income streams, it's like the tap was turned off. Due to COVID and restrictions, and that put me in a position where I'm like, okay, I can't get too comfortable. All right. So then that activated myself. I'm like, okay, let's try and build another stream of income. And that's when the YouTube idea came in.
Okay.
And that's when I started YouTube.
I love that. I love that. A lot of people actually started, when I think about it, you know, podcasts, YouTube channel, and it's great because, you know, you discovered that actually you can create content, you can create valuable content, and you can make money off it. That's another stream of income. That's essentially what your third, fourth stream of income, which is absolutely fantastic.
My YouTube income, what I'm earning now on YouTube, is pretty much can cover my living expense right now. So, and everything else is just a bonus. And it's like, for me now, it's no longer initially trying to be financially free. That was my initial objective. Now I've achieved that. It's more like, okay, now let's see if I can become a millionaire, and then if I get a millionaire, maybe a multi-millionaire, and then just push my potential. So now it's no longer about financial freedom. It's more about trying to realize my full potential. And that's where I believe my stage is at. Yeah.
Obviously, you're very intelligent and you're financially intelligent. Some people are intelligent, but financially, they're not good. They don't know about the assets or liabilities. They're making all this money, making 100 grand, 200 grand. They've got nothing.
That all comes from reading, you know. They don't teach it in school. Do you get what I'm saying? Like, that's the reality. They don't teach that.
That is a reality, which is why we do what we do, right? Because we're trying to get people to that part. However, what would you say is your worst financial mistake that you've ever made?
Oh, it was a property that I invested in York, right before COVID hit. All right, so York predominantly is an area that's mainly for tourism. And, you know, I put a lot of my capital into that property, and then COVID hit. So I was down significantly. I couldn't use the property for its purposes because people weren't allowed to travel. And that took a financial hit. And also the market crashed. So, but a lot of my money was tied up in York. Do you get what I'm saying? So I was in a position where, you know, it's almost like a double-edged sword, because I got the property which wasn't making money. And I got a lot of capital tied up into it. And then the market had crashed. I didn't have that much money to really capitalize on these amazing deals at the time. So that was probably one of my worst financial mistakes. And it was purely down to timing. My timing was off. But again, no one could have foreseen COVID.
No,
you know what I mean? But that hurt.
That's a black swan event, to be honest. Like, nobody, if anybody could foresee that, we would have all had our cash piles on the side ready. But, you know, that was a complete black swan event. That was like one of those possibly once in a lifetime sort of events. It was crazy. Everything got hit. Everybody got hit.
That crisis itself created, you know, a basket of opportunities. You know, and like for me, you know, even though it was one of my worst financial mistakes, I ended up making the most money I've ever made in my life in 2020 as a result of COVID. As well as that, it created 2 additional income streams from that crisis that I'm benefiting from now. So it was a mistake, it was a crisis, but it was also an opportunity if you were open-minded and if you were seeking opportunities amidst the crisis.
Exactly. I read somewhere, I think it was a comment of a motivational speaker, where he's saying we look too negatively upon our mistakes instead of looking positively towards our mistakes. And you looked at it positively. You're like, okay, this is an opportunity for me to build, you know, streams of income from 2 other places, which is a great story. Okay, so I want to understand a bit more about, you know, Ttcf, your motivation around investing in Ttcf and Palantir, because you talk a lot about them.
It was a matter of time.
You knew it was gonna go. Yeah, you knew we were gonna go there, right? What is it about Ttcf that you are so bullish about it? So why did you invest in Ttcf?
Okay, there are a number of reasons. Okay, so first off, the industry it's in. Okay, so one of the first things I look at when I'm looking at a stock is the industry. I want to understand the size of the industry and the growth rate of the industry. So Palantir had a tick for that, because it's in a plant-based industry which is on the rise. It's growing at almost double-digit rates since 2015. I mean, you've probably heard of it, you know, the veganism, like everyone's more health conscious and stuff. And I think that's going to continue. I don't see that slowing down as more people become health conscious. So the industry that Ttcf is in, I love the industry. The company itself, I really was attracted to the brand. I liked the brand Ttcf. When you look at a lot of other plant-based food companies, if you go to your local supermarket, their packaging is the green, brown, just very boring. And then you've got like this bright light, almost like a halo almost, which is Ttcf. it stood out to me, and I thought this brand, I liked the name, the Tattooed Chef. I liked the packaging. It stood out to me. And then I looked at the management. I looked at Sam Galetti. I saw this guy has been in this for like 35 years. And has been in the food industry for longer than I've been alive. And you know, he's in this with his daughter, who's Sarah Galetti, is the creative, you know, chief executive. And you know, I love the story. There's a story behind the company. All right. So the founder's got great experience. It's a family business, and they've got skin in the game essentially. So again, that's another tick. All right. So then I looked at the size of the company versus the size of the industry. It's a baby, right? It's a baby, but it's a baby with a ton of potential, because they were initially a private label company, and they were already providing, you know, private label services to the likes of Sam's Clubs, you know, Walmart already. So they're a baby, but with an edge. All right. So the company had an edge. And I'm looking at this company, and I'm just like, my God, look at the valuations. And I just see so much potential. It's literally at the beginning of its growth trajectory. And, you know, everything just seems to fall in line when I was doing my due diligence last year, September, when it was a SPAC, all the criteria that I look for when I'm investing. And I feel like, okay, when I invested, it was a $1 billion company. You know, even if this company realizes 10 billion in terms of valuations and a market cap, that's a massive return on my investment, even if we hit 10 billion. And I think it can go even further, you know. So that's one of the reasons why I'm very bullish on Tattooed Chef. It's my largest position. I just see so much potential, and we're on the right path as a company. We're on the right path.
I liked all the metrics that you use. You said, you know, the owners of the business, the fact that it's in an industry which is growing. I actually like the vegan industry too. I eat some vegan products too, because I guess they're healthier. You want to, you know, you can't just be eating meat all day.
Some.
Yes, I say some. I'm not like, you know, fully there yet. I don't think I'll ever be a full vegan. But I understand the health benefits to being a vegan. And like you said, it's only going to grow. It's just going to, awareness is going to be there. It's better for the environment. It's better for your health. It's a win-win. Why not, right? So I definitely understand all of what you're saying. What would you say are the weaknesses of Tattooed Chef, if there are any?
Some of the weaknesses with Tattooed Chef, I think a lot of investors have highlighted it, or YouTubers have highlighted it. I think it's probably their communication. You know, there's been a lot of criticism recently with regards to the real reason as to why Sam Galetti gifted some shares to the CEO, which I've covered on my channel. So they could have been a lot more clearer from that point of view. But then again, remember, these guys only went public November last year. So the management team are still learning what it's like to be public. You know, they've been private for so many years. And, you know, that's probably another weakness you can identify, is that, you know, they lack experience being in the public eye now, being in scrutiny of shareholders, you know, contacting investor relations. Like, they've got to deal with all of that now. And, you know, you got to be patient, because they're not just like, no one comes out of the gates and, you know, gets it right the first time. They're going to learn from this. You know, they're going to understand communication is important to shareholders. And you know, it's not just about just focusing on the business and growth. You've got to think about other outside investors now as well. And I think that's probably one of their main weaknesses, is their inexperience in the public sector.
That's very interesting, actually. That you
are you invested in Tattooed Chef?
I'm not. You know what? It's because I'm in Beyond Meat. It's because I'm in Beyond Meat.
The enemy.
No, well, I'm not. No, we're not enemies. I don't think it's a zero-sum game. I don't think it's a zero-sum game. I think what's gonna happen, because there's not that many well-known, let's say, plant-based providers. So I can see Beyond Meat being in there, and I can see Tattooed Chef being in there. I don't think it's going to be Beyond Meat crushing them and they can't exist. I mean, after all, we have Coca-Cola and Pepsi and Fanta and all these other places. So I don't think it's exactly. Exactly. To be honest, I'm going to do some research. I actually have a reminder in my calendar. This sounds so weird. I have a reminder in my calendar to actually compare the valuation, because I'm actually considering moving my investment from Beyond Meat to Tattooed Chef, because I think Beyond Meat is getting to the point where I think it's getting a bit expensive. And although they're like the premier brand, they've got all these partnerships, I don't feel like they're delivering. Whereas with Ttcf, I keep on seeing that they're delivering, they're growing fast. So I am considering it there. But I don't dislike Ttcf. I actually like them, which is why I asked you about them, because I think they're actually a great company. But talking about great companies, another company I'm not invested in is Palantir. There's no real reason why. I just haven't, I guess, got the headspace or the bandwidth yet to get there. So understanding what your motivations are for investing in Palantir.
They're a once in a lifetime opportunity, I think. Palantir, the way I look at Palantir is like, if I was to go back in time and, you know, you told me about Google, you know, or you told me about Apple or Microsoft, you know, or Facebook, I feel like, you know, now in hindsight, it's like, oh, you know, that was, you know, the best thing to sliced bread. But at the time, people didn't really understand it. You know, they didn't really understand the potential. They didn't really have the foresight. They weren't looking, or even Tesla, you know, like Elon Musk painted a picture of where he wants the company to be in the next 10 years. And my man has achieved it. You get what I'm saying? But you need to have the trust and the CEO and also the foresight to be able to envision the opportunity. And, you know, we all look back and think, okay, missed opportunity, we should have gone in then. But, okay, that was then. What about now? What opportunities are being presented now? What's the next batch of, you know, mega caps that are currently smaller mid-cap size caps now? You know, there's no point looking back. The only time you should look back is when you need to learn. And, you know, I learned that, okay, I missed the opportunity. Well, I was a lot younger as well. I wasn't really interested in stocks at the time. But okay, now I am. What's the opportunity now? And I strongly believe, I have that conviction that Palantir is that next big mega cap company. Their moat is unbelievable. Like, they're one of one right now. Literally zero competition in terms of their contracts with the government and their platforms, their Foundry platform, Apollo, Gotham. You know, there are no competitors, you know, in that space. And that straight away tells you how wide of a moat Palantir has. I think a lot of people struggle to understand it. I think that's a great thing, because a lot of people struggle to understand Facebook. You know, how is Facebook going to make money? You know, you had MySpace come before it, High Five came before it, Bebo, all these companies came before it and failed. You know, how is, you know, people don't understand Facebook at the time and missed out. Do you get what I'm saying? People don't understand Tesla, like, what electric vehicles when, you know, everything's oil, like, how we can't see a world where it's electric vehicles. You know, here we are now in 2021. So sometimes when people don't understand something, it's a good thing, but that means you need to work extra harder to do your research and you get an understanding and then have the vision to see how Palantir can be impactful. I mean, you only have to look at their relationships with countries, you know, that they have to tell you the significance and the importance of their software platforms. And that's only going to continue to grow. As you know, Palantir, almost on a weekly, we're seeing private clients extend contracts, governments extending contracts. The telltale signs are there. Do you get what I'm saying? And I think at its, 40 billion, 50 billion market cap, you know, if it does exceed, reaches potential that I see in the next 10 years, this could potentially be close to $1 trillion company, if not the next $1 trillion company in the next 10 years. And me getting in now at 40 billion, bargain. You know what I'm saying? So I'm investing with a 10-year lens, essentially. And that's one of the reasons why Palantir is my second largest position. Plus, I like Alex Karp. You know, he's a CEO. I really love his vision. I love his mind. I think he's very smart. And, you know, I back him as well, because I think the leadership is equally as important. Because I can have the foresight, but if the leadership is off, you know, they're going to run the company into the ground. So I've looked at Alex Karp. I've studied Alex Karp. I trust him.
Want to roll it back. Are you able to quickly tell the viewers what Palantir do? You don't have to go in complete detail, but just like a short overview or summary of, you know, what they do.
Okay, so Palantir is not an easy business to understand, but to break it down to, let's say I'm speaking to an 11-year-old, right? Because Peter Lynch says, you know, if you have to be able to explain to an 11-year-old in 2 minutes or less what the company does. So Palantir, right, Palantir has multiple platforms, right? Software platforms that collect data, information that a company or a country has. And Palantir software are able to quantify that data, extract important information from that data. And not only that, a lot of companies can do that and fall short, but Palantir software is able to then provide solutions, right? Gives the users or the clients options in terms of making critical decisions. All right. So it's almost like if you think of Terminator, Skynet, like the AI, artificial intelligence, being able to make decisions on your behalf and be absolutely right. That's what Palantir software is kind of about, because the UK used Palantir software Foundry to be able to, roll out the most efficient COVID vaccination plan in the world at the moment, and that's down to Foundry being able to make critical decisions on behalf of the client, which is the UK government. So that's how I would explain Palantir to an 11-year-old.
Okay.
They collect information and help you make critical decisions. That's usually right.
Okay. I love that. See, you did it. You did what Peter Lynch said.
Know what you own and why you own it, brother.
That's exactly. Exactly. A lot of people definitely are investing and trade. Well, let me not talk about trade because that's different. But investing in companies that they don't know nothing about. Oh, somebody told me to invest in it. And you're like, seriously? You don't know what you're invested in. You don't have an interest in it. Like, I don't get it. Like, you're interested in fashion. Okay. You've got ASOS, for example, right? That you can use as a retail company. So there's so many like companies that can align to your interest. Just look for those. Just don't look at what other people are doing. That is exactly. That's the way you're going to fail at the end of the day. When it goes down, you're going to sell up. And that's what a lot of beginners making, those mistakes.
And I've made those mistakes. Those mistakes have cost me thousands of pounds. I didn't just get into this mindset now. The reason why I'm into this mindset now is because I lost a ton of money, right? Investing in companies that have hype and I don't really know what they do. And when they go down, I get panic and I sell. Do you know what I'm saying? Like now I've explained what Palantir does in a brief summary. I can foresee companies in the future, rather than having people trying to make decisions based on data, just implement Foundry and get critical decision making. Right, let's go. Let's act on what Foundry has recommended. Do you know what I'm saying? That takes so much weight and pressure and off humans, whereby Foundry is doing it on your behalf, and I can just kind of see that being the future. Do you know what I'm saying? Like we're all looking for easier ways for everything, easier ways to travel, easier ways to eat, easier ways, to make decision making. We're all looking for easier lives, right? And Palantir just makes critical decisions easy on a scale that no one else is competing right now. And I just don't see how that is not worth or close to $1 trillion solution. When Palantir drops now, it's a no-brainer for me to pick up even more shares. Do you know what I'm saying? It's a no-brainer. But if you've invested in Palantir because your favorite YouTuber has, and you don't really understand why, and then the market's gone red and it's below your average and you're in the red, you're gonna be like, you're gonna sell because you don't actually understand what they do and why it's important, and you don't see the vision. So that's what a lot of retail investors, that's a mistake a lot of retail investors make at the beginning, and I made that exact same mistake.
We're going to talk a bit more about how we can help, beginners become better investors. How many stocks are you invested in? Do you know roughly?
I'll say I have 3 different portfolios. Okay. So I have a hyper growth portfolio, I have a normal growth portfolio, and I have a dividends portfolio, right? Okay. So in my dividends portfolio, I've consolidated it down now to only 4 stocks. All right. Okay. So the Medical Properties Trust, National Health Investors, Stag Industries, and Goldman Sachs. Okay. And then in my growth portfolio, of course, you have the big names, mega caps. I have about, so typically across all of my main 3 portfolios, I have 5, 6 stocks per portfolio that I monitor and track, and they hold the majority weight of my portfolio. So for example, my hyper growth portfolio, it's mainly Ttcf, Palantir, and Celsius Holdings and HIMS that makes up 90% of that portfolio. Right, just those 4 stocks, because I've learned to bet big on my best ideas. That's one of the lessons I learned from 100 Baggers. I'm trying to look for the book. Okay, it's probably in my bedroom. But 100 Baggers. It talks about betting big on your best ideas. And then I do have maybe like 10% of my portfolio is made up of smaller positions. That weigh about 1% or 2%. So
okay.
I have about, I would say about, I have about 12 stocks that I follow very closely and that weigh a lot. But even that's a lot. I'm going to try and bring it down. What about yourself? How many do you have in your portfolio?
I've got more. I've got in the 20s, but I'm trying to, because mine is less concentrated, and that's what I'm trying to do. I'm trying to bring it down. There's some that it's hard, like, oh, Apple, like, oh, I don't want to miss out. But then Apple, how much more can it grow? So I've got Apple, Google. Should I just go for the hyper growth? And I think that's what I'm trying to do, because at the end of the day, right, like, of course you want the steady gains, but I'm in the business. When I'm investing for that growth. So let me have that commitment to that, instead of, Apple and Google, they've done their day. Yes, they will continue to grow, but they're not going to grow as much potentially as the companies that I really believe will be the next them. I've got a bit over 20, but I'm trying to consolidate mine. I think 12 is a fantastic number. That's a fantastic number. And it's a lot easier to track them as well.
On what you said about Apple and, stuff, like, I think you have to also understand that, Apple, Amazon, Microsoft, Facebook, I think they're still going to continue to grow over the long term. They've been one of the best performers. The mega caps have outperformed the small and mid caps so far this year. But if you are concentrating your portfolio, you have to also understand that, your portfolio fluctuates and it will lag the general market at many occasions. But right now, year to date, I was up 12%, my portfolio, my hyper growth portfolio. But I'm now down only to 1% now on the year, and that's significantly underperforming the S&P. The S&P is at all-time highs. So you need to understand that if you are going to concentrate your portfolio, you need to be ready for huge swings, right? But the whole point of investing is over the long term, right? So you want to see how your portfolio going to perform over the next 10 years. The CAGR of your portfolio versus the CAGR of the S&P 500. And if you've invested in quality small to mid caps, you should definitely outperform over the long term.
I completely agree, because those small mid caps are potentially going to become mega caps, like you say, or large caps over the long term. By the way, when we're saying mega caps, large caps, we're talking about the value of the company. So there's a sort of, I guess, a threshold to become a mega cap, a large cap. You talked about some of your investing mistakes, but are there any companies at the moment that you think nobody should invest in? It's completely just avoid that company. Is there any particular that comes to head?
There's a ton. I mean, so towards the end of last year / early this year, there was quite penny stocks were going crazy. You know what I'm saying? Penny stocks were going crazy.
Yeah.
And I shoot. I mean, I got involved as well.
We all got involved. Everybody got involved.
I invested in a lot of trash penny stocks. That I knew the risks, but mate, if they're making me 100%, 200% in a day or 2 days, I'm game. You know what I'm saying? And I think I did get involved. I did make a lot of money. Like I said, I had the best year of my life last year, and that's because a lot of the penny stocks I've invested in went crazy. All right, so but then it can't go on forever. The market turned mid-February, and a lot of the pennies that were in did pull back. A lot of them are in the red. So companies that promise stuff, but there's no way of them being able to deliver, are companies that you need to avoid, stocks that you need to avoid. And you'll find a lot of them in the OTC markets. So I would say, if you are going to dabble in the dark dimension, aka penny stocks, just invest money that like, look, if I could lose every single cent. And that's one thing that I did at the time. But I think that's where a lot of newbie investors made a mistake. I have a Discord, Generational Wealth Builders, and I do portfolio reviews for a lot of my Discord members. And it was frightening to see that when I was doing portfolio reviews for my Discord members, some of them had 80% of their portfolio in penny stocks.
Wow.
HCMC is one, DSGT is one. They just went all in pennies, and their portfolios are getting creamed right now.
Wow.
So it's just understanding what you're investing in, understanding that, look, this company is on the verge of bankruptcy, but they could make return 100% tomorrow. So just invest small amount that you're not afraid of losing. And if you're up by quite a bit, don't be greedy. Pull your initial capital out at least, and then you should be all right. But yeah, penny stocks, stay away if you ain't got the heart for it. Did you get involved? So what did you get involved in?
I got involved in HMC.
Yeah.
I haven't lost a lot on it because what happened was I bought in low and then I sold high and then I bought in slightly lower. I should have sold when the whole court issue was happening. I got too greedy, and most of us got too greedy.
100%.
With these penny stocks, when you see, honestly, if you get a 50% gain, take it out because that's good. If you think about it, imagine 50% return on your money. Where else could you do something like that? You're not doing that on property. No. You're not doing that on anything else with the click of a button. So it was just greed on my part.
Dogecoin.
Yeah. Crypto's another one. But those are just pressing two buttons, right? You imagine pressing two buttons and you're getting 50% on your money. So that's how the greed took over me. So HMC,
Facts.
ALPP, I haven't really lost, but Alpine, I should have sold when it was a lot higher. So those two were my main ones that I didn't want to get into penny stocks too much. I did have some big wins.
It's human. Do you get what I'm saying? But as long as you learn from it, and if you made money, even better. Like I'm net positive by quite a lot in terms of my penny stock endeavors. And a lot of them, like a lot of the times, I was putting out my money at 100% profit and then just buying more Ttcf, buying more pltr. But a lot of people again got greedy, like you said, and you need to be fearful when people are greedy, as Warren Buffett says. So the telltale signs were there, but as long as you learn from it, brother, and it didn't wipe out your account. You lost a
no, it didn't.
Yeah.
No, it didn't. No, it wasn't even. It wasn't even 10% of my account. I was very careful about it. I mean, I didn't do no penny stock content because I was so scared that I was like, no, this is crazy. Literally,
that was
every penny stock was flying. I don't know how. I never seen nothing. Maybe it's because I never seen nothing like it. Every penny stock was going crazy. I was like, what is there? Some kind of machine somewhere that is just saying, okay, today's your turn. It was nuts. Like I never had seen anything like it. Like you said, the signs were there because the same thing happened in crypto. Literally everything was just
poo coins
going off. Just going off. Like,
and,
I don't know
the reason why I didn't talk about poo coins on my channel because I saw the impact my channel had on people's portfolios. People there are really people that don't really know what they're doing. Do you know what I'm saying? Like you said, you risked 10% of your portfolio in pennies. Like I said, it was horrifying to see so many people with 80% of their portfolio in crappy companies that I spoke about on my channel. And that's really where I felt a huge responsibility. So even though I did make some money, I dabbled in some poo coins, I didn't dare speak about it on my channel because I'm like, I can't afford for people to lose even more money if they're not responsible and not balancing out their risk appropriately. So that's why I never spoke about poo coins on my channel. And I mean, look at the market. The market's absolutely tanked now. So
yeah. And that's just the reality of it sometimes. And unfortunately, yes, they've lost a lot of money, which is never great. But at the same time, they've gained a better perspective. Okay,
I mean,
now we understand.
I'll be honest, most are out of the game. Most have quit.
That's the frustrating thing about it, like quitting on investing. And you're right, like, and we're going to talk a little bit about beginners and how we can help beginners. How much did you make last year? You don't have to say the exact figure, if you can give a range. And what's the value of your portfolio and how long did it take you to build the value of your portfolio?
So last year, my portfolio across all of them, I crossed six figures mid last year. So I was buying heavy during the crash as well with money I had. And it was pretty easy. You could have picked anything last year, March, April, and it would have gone up. So my portfolio itself, my hyper growth portfolio crossed 6 figures. My growth stock portfolio was already in 6 figures, and my dividends isn't at 6 figures, but it's approaching 6 figures. And like I said, last year was the best year of my investing journey. This year been a bit more consolidated. It's almost flatlined a little bit in terms of like the market motion. And like I said, I'm down on the year, but yeah, I mean, across all my portfolios, they're all, apart from my dividends portfolio, they're all across 6 figures. And my goal is to get them to 7 figures, within the next 10 years, hopefully sooner. But that's my So we're doing all right. I'm investing, being smart with my money. And in terms of how long it took me to get to 6 figures, so I started investing in 2016. But I said it many times on my channel. I thought I was investing. I was really just a trader, and I lost a lot of my money, day trading, swing trading, all of that nonsense. But a lot of the money started in 2019, and it just accelerated in 2020. And, in 2021, it seems like it's all about preserving. All right. Because you can have 2-3 great years and you can lose it all within 1 year. And, that's happened to many, many investors. If you read this book, Richer, Wiser, Happier by William Green, covers many investors who, outpace the market, beat the market decades at a time. And then just 1 year is all it takes to wipe out your account, one wrong investment. So, even though, the portfolio's up, it's doing well. It's all about, it's one thing, generating wealth is one thing, sustaining the wealth. So that's the name of the game.
Thank you so much for sharing that and sharing it in that way. What would you say are the biggest challenges for you because you've built a nice portfolio and you're talking about now preserving it? What would you say is the biggest challenge that you have faced for you to get to where you've got to in investing?
Accepting when you're wrong. Right. Ego plays a part with investing at times. And then I think this year is really where I've decided, I learned from, Charlie Munger, one of the important skills as a long-term investor is being able to admit when you're wrong and learn from it. And, I recall Boeing, ticker symbols BA. I lost close to 30K in Boeing due to being stubborn, right? And trying to time the market and, being fearful. I was in and out of Boeing, and I remember I lost over 30K in just that one investment. And, again, that was down to ego, pride. I wanted to be right. I had to be right. And it was a big mistake, massive lesson learned.
Wow.
Take your ego out of investing, follow the facts. All right. Just follow the facts. And it's okay to be wrong as long as you learn. All right, it's okay.
Sorry to hear about that. I mean, to be honest, I'm glad that you're on a net positive this year and that you recovered it. And
you're gonna lose money. Do you know what I'm saying? Like, you're gonna lose money. Like, if you're not okay with that, don't get in the game. Don't invest. Because if you can't accept the fact that you're gonna take some L's, I mean, all of the best investors of all time have lost money. So what makes you think you're going to be any different? You're going to lose money. And if you're not okay with that, don't step in this game. The game's not for you. If you always have to be right, if your ego has to be massaged, this ain't the game for you. The market doesn't know you, doesn't care about you. The market's been here before you were born. It's going to be here after you die. So it doesn't owe you anything. Do you know what I'm saying? So if you can't play the game as it's meant to be played, don't even start.
Great
certain
advice.
People are okay with losing money. Certain people are not okay with their portfolio being in the red. It's not for you.
That is great advice. That is great advice. It's funny
it's
because
real though, bro. Do you know what I'm saying? People don't want to hear this, bro. You know what I'm saying? And this is where people go wrong. Like, no one cares about you. The market doesn't care about you.
You gotta give them the real. Oh my gosh. Okay. So if a beginner wanted to start, or beginners in your Discord channel, how would you advise them, or how would they get started in the stock market?
I would say before you put a penny in the market, read One Up on Wall Street by Peter Lynch. read. because look, at the end of the day, success leaves clues, right? There's a blueprint, there's a formula to success. They don't teach it in school. You can decide to learn that formula by making your own mistakes, but a wise man learns from other people's mistakes, right? Mm-hmm. And it's very rare to find YouTubers talking about their mistakes. They always want to show you their successes. All right. I talk about my mistakes a lot because I learn from it. And I want my audience to learn from it. But it's very rare to find people. No one likes talking about L's. Who likes talking about, they lost money today? Nobody. Do you know what I'm saying? But a lot of these seasoned investors that are all retired and stuff, they all share their experiences, how they lost money, how they made money. And you need to learn from others' mistakes if you want to be an intelligent investor. I think that's part of the process. So I would say, if you're a new beginner, before you invest in the market, get as many books as you can, read, understand the formula, understand how people who have consistently beat the market, that are multi-billionaires from investing, how have they done it? It's crazy that you can learn so much in like a £10 investment. One book, £10 on Amazon, and you can learn someone who has been in the game for 50, 60 years and sharing their experience with you. And there's a lot of pitfalls that you can avoid, but we can't be asked. You know what I'm saying? We're a generation, we can't be bothered, and would stupidly rather make their own mistakes and learn their lessons by themselves. But a wise man learns from others. So learn the blueprint, learn the formula, and I think you will do much better than other people who aren't. You've got an edge.
You hit the nail on the head. A lot of people just want to take the shortcut. They don't want to. And it's funny because taking the shortcut is reading the book. Take a month, right? You read 10 pages a day. That's 300 pages. You've probably gone through the book, right? If we're talking about Intelligent Investor, that's what? Roughly just under 600 pages. Same formula, do it over 60 days, and you've gone through the book. But a lot of people don't realize actually you are taking a shortcut by reading the book, but they think that's the long cut. No, let me invest, and then they end up losing money and then quitting, and then they don't go through that wealth building process. So you're absolutely right. Learning from other people is definitely the surest and the fastest way to reach your success. So after a beginner has read One Up on Wall Street, do you think beginners should invest in stocks or funds or both?
I personally prefer, so I prefer individual stock picking. That's what gives me excitement. But I think if you don't have the time to invest to learn how to read balance sheets, income statements, cash flow statements, and then also 10Ks and 10Qs, all the quarterly reports, annual reports, if you haven't got that time, Warren Buffett has said it best, 95% of investors should just invest in the index, in these funds. So you have to be real with yourself. If you don't enjoy stock picking, if you don't enjoy the research that it takes to find a company and invest, then just invest in a broad-based index. It's safer. You're going to get decent returns over time. And you're going to probably outperform a lot of individual stock pickers.
You said everything exactly that I tell my viewers all the time. So yeah, that is fantastic. So you talked about some of what you look for in a fund or stock. From a beginner's point of view, what do you think they should? What's the three most important things that they should look for when they're investing in a fund or stock?
Income statement, balance sheet, and cash flow statement.
Okay.
You need to understand how to read financials. Do you get what I'm saying? Because that's the difference between investing in a company that, is going to thrive over the long term or go bankrupt next week. All right. Mm-hmm. So if you can't read the balance sheet, it doesn't matter anything else. If you invest in a dud, you're going to lose all your money. Do you know what I'm saying? So I think for me as a beginner, you need to invest time in understanding how to analyze companies, how to value companies, how to assess their financial strength or weakness before putting a pound in. So education, it's all about education in this game. The more you learn, the more you earn. And that's really applicable with stocks, in my opinion. And even funds, even if you decide you want to invest in a fund, you need to understand the fees that they pay. You're going to pay, it's not just willy-nilly, just invest and just sit back, relax. Like people get crushed on the fees if you don't understand the fees. So again, and then you need to understand the companies that make up the fund, because the fund is just a basket of stocks. that's been handpicked by more people that are smarter than you, right? So, but there's a fee for that, right? So again, everything involves researching on and having an understanding. No, number one pillar for investing in anything is you need to be able to understand it. Even if you're going to invest in property, you need to understand the area. You need to understand the type of tenants, the type of people that live in that area. So any investment involves risk, period, right? And the more you know, the less riskier the investment.
That is
we're dropping gems, bro. We're dropping gems.
No, you're lots of gems, lots. Like they're gonna be happy. This will probably be like their favorite episode, honestly. There's a lot of meme stock, meme cryptos, and I think that why they're so popular, of course, aside from Elon Musk and other influencers, pitching these investments, should we call them? I feel like a lot of beginners, why they get into it, because of the allure of getting rich quickly. They think that they're going to get millionaire overnight. In terms of your understanding of investment, what do you think? Do you think it's a get rich quick? Do you think it's possible to get rich quick with investing if you do it properly?
I mean, it's possible. Some people treat the stock market as, a casino. And, there's this guy called... the Dogecoin.
Yeah, I watched a video on him yesterday.
Yeah, he's an example of someone who became a millionaire by going all in, risking gambling, and he paid off. It's like, what's the point of doing all this research and due diligence when my man can invest in a coin, a poo coin, and then it flies? I don't think he's a millionaire anymore, because I think he's still holding his position and he's down to 900,000, but. Some people can treat the stock market like a gamble. It might pay off. 99% of the time, it does not pay off. But yeah, I mean, I don't. You can get rich quick. It is possible because people have done it. But Charlie Munger said it best, right? He says, people that invest in the stock market would rather go broke fast than get rich slow, right? And that's so true. Mm-hmm. That sums it up. People would rather go broke quick than get rich slow. And he said him and Warren don't have that compulsion, and I'm okay. Like, for me, it stems from being in a comfortable position now financially, where I don't need to invest in Title Chef, and it needs to 10x tomorrow. You know what I'm saying? I'm happy to follow the company and let my capital appreciate over a long period of time. And I think that's one thing. Another mistake investors make is that they invest with money that they need in the next couple of months. So if it doesn't do anything and if it drops lower, they pull out. If you got to invest in money that you don't need for the next 5-10 years. Yeah. And that's what, for me, that's what I do. Like, so rather than have my money tied up in a savings account that's returning 0.02% a year and inflation's growing at 4%, I'd rather just put it in a company that I believe will, be the next ETC. All right. So the stock market is almost like my savings, essentially. I don't need to get rich quick.
Have you got any advice that you want to impart onto the viewers? Any final thoughts?
I mean, we've given a lot. I think
we've given a lot.
I think one of the first advice is that learn, educate yourself. You can get rich quick, but it's very, very rare. The odds are 99% you will lose money if you go in with that mindset. I would say learn as much as you can, get as many books. There's so much information on there's so much wealth of information in regards to investing successfully on Amazon. It will cost you £10. Learn as much as you can. Look for people around you that are like-minded. Don't go in with an ego. Forget your ego. Leave your ego at the door. Understand that you will take losses. It's part of the game as long as you learn from it. And yeah, just enjoy the process. I think the most important thing is enjoy it. If you don't enjoy it, don't get involved, right? I think that's the key thing. If you don't enjoy learning from others who've gone before you, don't enjoy losing money sometimes, if you don't enjoy growing your portfolio over the long term rather than you want to get rich quick now, this ain't for you. So yeah, that's my advice. And yeah, I wish you guys all of the best.
Great. Thank you. So tell the people where they can find you.
So you can find me on YouTube. It's at Emmanuel Finance. You can find me on Instagram, Emmanuel Finance. You can find me on Twitter, Emmanuel Finance. You can find me on Facebook, Emmanuel Finance. You can find me on Stock Tweets, Emmanuel Finance. You know, I'm everywhere. All right, you don't have to look that hard. You'll find me. But I'm all social platforms. I should be there. Apart from TikTok, I tried TikTok. It's not for me, bro. TikTok's not for me. So you won't find. You'll find me on TikTok, but I'm not active on TikTok. So, yeah.
Oh gosh, and you said that you had a Patreon as well, right? About
I mean,
as well.
If you're looking for a community that we focus on long-term investing, I call my Discord's called, my Patreon and my Discord is called Generational Wealth Builders, because I think that's what we're trying to achieve here. So you can check Patreon, Generational Wealth Builders, or Discord, Generational Wealth Builders. That's my Discord. Yeah. And we're all about building generational wealth, not get rich quick. So my Discord is not, alerts or pumps or this like that. I do alert my Discord with what I'm buying, but then we also share research in our Discord as well regarding certain stocks. So yeah.
Awesome. Thank you so much for all the knowledge that you have shared.
Appreciate it, brother. Appreciate it.
Absolutely appreciated. Thank you so much. I hope that you've enjoyed this episode of The Takeoff, and I'll see you next week.
Peace.